unlikely. But you know, the interesting thing about the real estate industry is that despite no cuts in sight, they have not really seen too much of a problem as far as demand is concerned. So Rajat Kathuria, of course, continues with us. He's CEO at Signature Global, but we're also joined now by Abhishek Kapoor, Group CEO at Purvankara. Abhishek, great to have you on the show as well. And since, you know, we're talking in the context of the monetary policy, we'll hear from the governor in about 15 minutes from now. Just trying to understand what impact, if any, the interest rate cycle is going to have. We might have a rate cut by December. Does that bode well for you?
Good morning, and thank you for having me on the show. Definitely, yes. You look, current interest rates have had no impact on the demand. As we see currently, we believe that the current interest rate environment is good for the real estate industry per se, but a reduction will definitely have a positive impact on the demand side as well as overall on the industry side.
Okay. And just a quick word from you, Rajat, on the monetary policy side of it and what expectations you have, if any.
So I think let's just wait to hear the governor. No expectations per se. I agree to Abhishek that there is so much of demand that interest rates per se at the current levels not having any negative bearing on the demand side. And there's this confidence amongst customers that interest rates not going up from here. You know, a lot of people are assuming that going forward they can only come down, which is giving them confidence while making the purchase and taking mortgages.
Abhishek, hi, it's also Samina joining in. Let's start talking about a little more company-specific news flow that we have. You've acquired a pretty significant piece of land in North Bangalore to the tune of about 3 acres. You want to share with our viewers what is the gross development value of this project and when can we expect it to come on stream?
Look, I'll give you an overall perspective of what's happened during the year. So for us, we have added about 6+ million square foot of overall area in new business development that we have done across India with a GDV of almost 12,000 crores. If you look at last year's number, we have sold about 7.26 million square foot. And if you look at what the plan is for this year, we're looking at launching about 12+ million of new projects and about 4 million square foot of new phases of the old project, totaling to about 17 million square foot. So keeping that in mind and the volumes we are doing our business development. Of course, North Bangalore project, which you asked about, is a 3+ acre project, and that's a residential development we are looking at doing with a GDV of 700+ crores. So on an overall basis, I think the target for us, and this is just the H1 of this year, is to continue to robustly add to our pipeline of business, keeping in mind the next financial year's growth plan as well.
Before we go on to that, you want to share with me what is the target you've set out for Purvankara in terms of sales for FY25 and where do we stand at? How much has been accomplished already?
Look, we don't give the sales value guidance, but as I said, what we have planned and which we have announced is 12+ million square foot of new projects which will come to the market. Most of those projects are in fact coming into the market in the third and the fourth quarter possibly being the largest, and that is typical industry cycle any which ways. In the first quarter itself, we sold about 1.2 million square foot, resulting into about 1,128 crores of sales. For the second quarter, we are yet to make the announcement on the pre-sales number, which is expected towards the end of this week. So, on an overall basis, we are quite happy. We see positive momentum in the second quarter, like always, and we will see better momentum in the third and the fourth quarter, which is largely on the back of new launches. I think, I kind of agree what earlier was discussed in terms of the gap today is of the launch and of what supply is we are able to bring to the market for a strong branded player. So I think we are on the same track. We're expecting launches in the third and the fourth quarter, and therefore we will see how that goes.
Just, want to get a sense of the kind of the industry-wise. Let's go a little industry-wise right now, Abhishek, and let me come to you on this. Maybe not specifically to Purvankara, but there is a sense that we are looking maybe at a bit of a go easy on new launches, And on bookings, are you seeing any of that happening, or are you expecting the festive season to change that mood and Q2 would anyway have been softer?
Look, I don't think Q2 has been softer. I think Q2 was better than Q1 for sure, overall for the industry. And I would expect, as the typical industry cycle, given that today, if you look at the inventory levels across the country, they aren't significant at all. I mean, more or less, it's less than a year, and that continues. On ground, what we're seeing on demand side, we are not seeing any let-up. I think the branded strong players will continue to see traction in the coming 2 quarters, and I'm anticipating that whatever as an industry we see as a growth, we will achieve that. On the other hand, on the price, I think the industry has reached where we will see inflation plus 2 or 3% average incremental price appreciation, which means that the inflationary impact of costs which were to be absorbed or passed on to the consumers because of the inflationary pressure in the past has already been taken into account. So we don't see any major increases because we're not seeing any major increase in the commodity prices. Of course, we have to wait and watch and see what happens. But on an overall basis, I think we'll see high single digits, inflation plus 2-3% increase. But of course, project to project, you will see much larger differences depending on what the cycle of the project is or stage of the project is. But on an overall basis, as I said, I think the demand continues to be robust.
Rajat, one quick question, and we very often, when we talk about real estate and the company, we're so focused on pre-sales, collection, and of course the top line, is that we forget to talk about what's happening on the bottom line. There's clearly an increase in raw material cost. How is that impacting your bottom line?
So, Tamanna, the increase in the commodity prices, or let me put it reversely, that increase in the end product price has been higher than the increase in the landed commodity price. That's at least been the trend in our local market over the last 2 to 3 years. And hence, we don't, foresee an impact on the bottom line vis-a-vis the increase in the cost of production.
Okay, so net, just one set of questions from my end. If indeed there are liquidity easing measures, if indeed it is dovish commentary from the Reserve Bank today, and if indeed we almost believe that there is going to be a rate cut in the next policy, I want to understand if sales get impacted at all, or would sales effectively be linked to the economic factors and not necessarily a 25 basis point rate cut or liquidity measures. Rajat, this first to you and then Abhishek to you.
So Neeraj, any kind of rate cut is a big welcome for the industry because it adds to the optimism and momentum, and it helps in decision making of the customer that we are getting into the rate cut cycle. So even if there's a 25 bips rate cut, people would assume that over the next 1 year we can see 50 to 75 bips sort of a rate cut, and hence it will ease the decision making of a lot of families. What we need to understand is that whether we look at Bangalore or we look at the Delhi NCR market, there are almost lakhs of families which are getting added to the bracket where they can go ahead
and take
a mid-income housing purchase. It really helps in the decision making.
Fair point. Okay. Fair call, Rajat. Abhishek, do you believe that too? I mean, normally people with 25 basis points will not really matter that much.
Yes, I agree with Rajat. I think the demand is robust. I think it is very, very much economy and, the economic cycle that we are in and that activity we are seeing. It's dependent on that, and we are continuing to see that demand come into the market. So I don't think there'll be any meaningful impact. I think we'll continue to see growth in sales as we have seen earlier. Yes, the only thing, as I agree with Rajat, is that it possibly might help the people to take decisions, make it easier or make a larger purchasing decision, because it also directly impacts the affordability of an individual, because the interest cost is directly linked to the affordability of how much loan can be given to a buyer. So I think in that sense it will be helpful. And of course, given that it's a start of rate cut cycle, we believe that in next couple of years, general direction seems to be that there will be a further rate cut. So overall, it will be positive, but I think it's really, really economy driven, and that's how you have seen in the past. Even with the increasing interest rates, we haven't seen any impact or let up in demand.
All right, gentlemen, both of you, thank you so much for taking the time out and being with us. Really appreciate your time this morning. Let's hope for a good policy. And in fact, that is what we focus on. It's a wrap on India Markets Open. Up next, we